Hello, friends. My name is Pinaki, and welcome to my channel FinTech Logics. Today's topic is generic product life cycle. Basically, my intention is to give an overview of the generic product that is offered in market and give a comparison of the product and services offered in financial services to this. So the key takeaways from this session would be how is the product lifecycle fitting to any generic context, and then a comparison. So let's start. So let's look at the product and services lifecycle. That this is basically the offering between a customer and any product and service provider. Why I'm calling it as a lead is that initially or the financial service, the product and service provider would have very limited information about the customer, and as we get more and more details, the lead gets converted to a customer, right? So that's what our starting step is, a lead, where we would have minimum data about a prospect who can take our product and services. But that process we call it as lead creation. So it can be very basic details like a customer's name, email ID, or a phone number. So where the lead creation process would start. Normally, uh, companies would have their systems to maintain these lead data. Now, once we have this leads, we shortlist uh, the products or services to different target segments and start our product and services communication. So somebody can give a call and tell them about the product and service offering. As we get some positive response for any product services, we go for creation of a prospect. So this might have some additional details than the lead, that what kind of product and services the lead is interested in. We do all the prospect communications, and when the prospect is ready for taking a product and services, uh, we generate an offer. So we do a offer generation that, okay, we can provide you this product and service with this cost, right? Uh, as we get a customer consent on the offer, the customer will make payments through various channels that we would have integrated with. Once the payment is done, customer would be created, contract would be created. As per the agreement, there might be negotiations. So, as per the agreement, contract would be created. We will pass on this data for customer service. So, right from taking this initial product service offering to in between communications, any grievances, handling any issues with the product, customer services will manage that. Uh, the customer will go on availing the service product and go on making payments if there are periodic payments. There might be a service or a product maturity wherein customer says that I no longer want to take the product and services offering. So at that point of time, we will proceed towards a customer termination. But do we delete all that data of customers as per different norms that those are coming in market? Yeah, periodically we will have to take customer consent and keep their data. But normally the data is not deleted, and those are used for next lead uh, uh, creation process. So you might be introducing new products and services. At that point of time, an old customer can be considered as a lead. Now, this is the normal service offering. That's what I have tried to put here in form of a cycle, and we call it as product and services life cycle. Now, the next point is how different is our product and services offering of for the financial services. Now, for simplicity, I have divided financial services product and services into three different groups. So first one is your liability, that means your deposit products. Second is your assets, which is credit, and third one is insurance. Now, why I'm calling it as a liability? Because this is uh, liability for the financial institution. So that's what we call it as liability products. And these are different types of deposits, investments, etc. Now, if you look at the liability product segment, we call the customer as an investor, and the basic cycle is similar. So we'll start with the lead creation process, and then we'll move to customer onboarding as the customer as the investor agrees for investing. So customer onboarding will have a lot of sub processes like starting from KYC to verification to bank account setting up all that. Um, Post customer onboarding, the investment servicing would be done. It might be a simple statement of the deposits to changing of bank account details for investment, etc. Right? So, and then if a customer on maturity of the investment product moves away, or even we maintain the data of the customer, and we can tell them for future offerings, those are being given for from the firm, right? So normally, it's a very simplified version of the investor life cycle is like this: customer onboarding, your investor servicing, and lead creation. Coming to assets or credit, uh, our customer is called as a borrower because he is taking money from the financial institutions. So here it starts with similar to as lead creation. You might be getting calls for new personal loan offerings or a auto loan offering, right? So right from there it will start lead creation process. Then the next phase of taking a customer is called as origination. So that starts with different kinds of verification to finally ending at a disbursement phase where the fund would be disbursed to either customer's account or some other third party's account. Post origination, um, whatever servicing is done, that is called as loan servicing. And even some of the loans can be also sold to some third uh, uh, party lenders who might be interested. So that's what I have put a phase of secondary sales, right? So basically, it will start with lead creation, originations, loan servicing, and secondary sales, right? If we come to insurance, this is pretty much similar to liabilities. Only difference is that you would have servicing wherein you would, instead of statements and all, the most important part would be claims, settlement, and all. So those would be part of servicing. Now, we also go for reinsurance in the insurance life cycle. So that also forms a part of the insurance service product and service offering. So in short, these are the high level um, process flow for in a product and life cycle offered by financial products. In my future videos, I will go into the depth of each of these process to explain about nitty-gritties of each of these because these would be elongated processes. We need to look at them in depth. I hope you enjoyed the overview of this product and life cycle, and in my future videos, you would be able to correlate this with all the product and life cycle that we'll talk about. Thanks a lot, friends.